a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Markets in turmoil.
Of course. Yeah.
You get to say it. You get to say it.
Listen, Louis Schiff, my boy, my friend, not my boyfriend, my boy that's a friend.
My boy.
I woke up. Listen, we're getting our bathroom upstairs redone, and like a peasant, I have to walk downstairs in the middle of the night to pee. I'm just sitting there walking. I mean, my teenage, kids are just. I'm sitting here, just underwear on, just like a zombie. 4 o'clock in the morning, just walking down to the bathroom.
You do what you got to do.
You do what you got to do. Check markets, and immediately sold puts.
Oh yeah, Vol is alive again. Vol.
I did sell puts because I own the puts. I didn't just sell puts. I owned the puts already, and I sold them. So I'm out of my put position yesterday. If you remember the saga of me being a long future and having some puts, I sold out of the future per Dan's wisdom yesterday. Did fine with that. Sold out of the long, and then about 4:30 this morning, sold out of the shorts. And so we're feeling good.
Matt, what part of that story do you like? The 4:30 in the morning selling puts?
Yes, for sure. The bathroom, combine a bathroom break and put monetization.
You sell puts at that bathroom break? Did you sell puts?
Some of my best trades have been midstream, and I'm not talking about this show. If that makes sense. So listen,
way too much.
Matt and I were in town with Rusty yesterday in beautiful Knoxville, Tennessee. It was too powerful. And so we had to move Matt out of the city. He's a little ways out of the city in a vacation hub around here.
I'm in a bird forest. You can hear the birds talking. They're saying good morning.
Yes, you are. Matt, how many slides did you do yesterday? And what was the best water slide you encountered?
I didn't do any slides yesterday. I did laser tag and several rounds of bowling. Many picture taking of rock climbing, laser maze. Fun time was had.
Neat.
I love that. But what about with the boys? That was all the stuff me, you, and Rusty did.
Right. Exactly. This is true. This is true.
Matt and Rusty and I. For those who don't know, I'm just going to give a little. This is your life to Matt Simon. For those who don't know, Matt. Well, we went to Chesapeake's, which is shout out if you're ever in Knoxville. We're landlocked, but if you want a good seafood restaurant, Chesapeake's is probably the best in Knoxville. It's an old money feeling, and so so it was good. But then for those who don't know, Matt is a bit of a history buff, and his focus on history is the Civil War era.
And the American Civil War, for clarity. Correct. Been a lot of civil wars. Talking about the big one.
Yeah.
I'm not going to tell you which side he was on. I'm going to let you figure that out yourself.
I'm wearing the colors. Listen. Well, I'm wearing the colors and an emblem, so it's not that hard to figure out.
Yeah.
But we did a little excursion, a little team building exercise to Fort Dickerson Park, which is a fort that has no walls and apparently never had walls.
An earthen fortification.
Earthen fort. Was that a normal thing in the Civil War to have earthen forts?
It was. It was a normal thing to have earthen fortifications. Yes.
Just the Obi-Wan high ground.
They just pile up a bunch of dirt
Are you serious?
You know?
That's
Yeah. Well, I mean, there were other sorts of forts too, especially on the coast. But yeah, and the famous forts that started Grant's illustrious military career. Well, didn't start it. He had been in the military a long time, but gave him prominence in the Civil War. Fort Henry and Fort Donelson. Fort Henry was probably not even as substantial as what we saw yesterday, Troy. This is our Civil War minute for today. The fort basically flooded, and the Union just kind of walked in or rode in on their boats, as it was.
Wow.
He would belong. Listen, he belongs to Panera with you. I feel like what he just said is what I would hear every time I go into Panera to see Dan Sheridan.
See, I don't bring up the Civil War anymore with the Panera in Tennessee, only because when they find out I'm a Yankee from Illinois and they start bashing President Lincoln.
But here's what I don't understand. So Tennessee, second minute of the Civil War, and then we'll get to the markets down 70. For those of you who don't know, there are international views. The American Civil War was fought between the North and the South, and there was a dividing line. And there were a couple areas where the dividing line got kind of blurry. One exception to that dividing line was actually Knoxville, Tennessee.
Is that right? Wow.
It was in the South. It was a Confederate area, but Knoxville itself was a Unionist, anti-slavery, abolitionist hub in the middle of the South. And Lincoln had a particular affinity for Knoxville and consistently wanted his generals to go bring Knoxville over. So it's interesting they say that, Dan. They know their history, and yet they do not know their history.
Who needs the Ken Burns documentaries? We have Matt Simon.
No, I've just read a couple books, guys.
That's right.
That's what everybody does. That's what every historian does. That's the the separation between a normal, well-balanced person who knows history and a PhD person is? A, about $200,000. B, the first one has a job. And then C,
wow.
C, and I'm not shots fired for those who also don't know. Dan's son is one of the smartest human beings on earth. Literally,
he's in there.
Literally one of the smartest human beings on earth. So anyway, I digress. Listen, I'm not smart, but I had puts. What is going on, Dan? This is a classic.
I'm not smart, but I have puts. It could be a song. I like that.
That's my t-shirt. This to me felt like a classic kind of man, they're good at tricking you. Like if you're trying to figure out the macro, you look at yesterday, and I have to imagine 80-90% said it's over.
Yeah.
But it's not over as of this morning, at least.
And I think what's interesting, I mean, when you look at, the first thing that pops out, is you look at the futures last night, the range, right? Troy and Matt, I think he had a range last night of almost 100 points. It traded the futures, which are, they traded as high as 67.18 last night.
Wow.
And now they're near 66.22. So that's a huge, it kind of, you would think at 67.18, happy days are here again. VIX back to 16 or 17, but no, my friend, that didn't hold. And now we're, Troy's puts come into play because VIX is up 2 or 3 points. So I just think, I think that's normal with just the huge move on Friday, even though you could, and you can look at the catalyst and say, well, we know, the China thing and that, as President Trump, I still think the best quote from yesterday, Matt, we were talking about the way President Trump dealt with it over the weekend. The China situation will be fine. And that was it. That's all the market needed to hear, those 5 words or whatever. But I think it's going to, take a little bit to unravel today or tomorrow. But I think you have a little better idea, don't you agree, today and tomorrow, what's going on in the market? Relatively low news week. I think you have PPI or one of the PPs at the end of the week, and you got the bank stocks starting today. And it's always funny to me, JP Morgan, he's always he's always complaining, the market stinks, this, and every time JP Morgan comes out with great earnings. So it's
JP Morgan's earnings are always great, and then they'll do the follow-up, and on the call or whatever, he'll basically say,
everything sucks.
The market is going to crash.
Oh, yeah.
And you guys will die. We're all going to die.
He's always
I like that. I appreciate that about Jimmy Dunn. Let me do this real quick. Let me share my screen, because one of the things that's interesting.
I love it. Listen, it's getting good when Troy brings out these squiggles. These squiggles and these letters, it's a good sign.
I like it.
It's getting spicy.
Yeah, it gets spicy. This is one of the clearest ways for me to make decisions that are discretionary. Is because it removes a lot of. I love market profile for this reason. It removes a lot of kind of emotional tells and just gives you the facts of what's happening. Because basically, if you look right here, can you see my mouse moving? I can never.
Yeah.
Okay, so this right here is the overnight action right now. And to Dan's point, I mean, we've had 120 point range tonight. This was yesterday's day. It was pretty compact, really. I mean, for a vol of 20, we had a 50, 60 point range yesterday, but we really didn't have that much of a range. We just kind of went up during the day. This was Sunday night. Now, so the first thing you'll notice, this orange line is the current price, ES futures. We are right below Sunday night's low. Okay. If we start kind of dipping below this to any significant thing, that's pretty interesting information to me, what we call market generated information, because we're saying basically Sunday was kind of, what you have to do is at that point say basically Sunday night, Monday was kind of like a profit taking or a resetting of like the structure a little bit. This was Friday. So the big number obviously right here is this low 65.91. If we today approach that and go below it, I'm going to go ahead and say that probably the rest of this week, and this is not financial advice, but this is just my guess. My guess is that the rest of the week's going to be pretty volatile. That'd be my thought on it. So
guys, you have below 6,600 for sure.
Yeah, I mean, basically, you look at this and it's like we're still kind of in the range of Sunday right now. We're just kind of digesting stuff. We're at the low basically of Sunday night's open, but that was kind of like end period is 3:30 to 4 on Friday. So we're kind of like at pretty lows where we were Friday. So if we go below that, after Trump has said like, just joking, that's pretty bearish. That's pretty bearish. Just, and again, that's not taking on a lot of guesses. That's just looking at the market and saying, we tried to rebound and we failed. And we're back at the lows again. That's pretty bearish. I mean, it's not like a genius take. It's just looking at generated information and saying we're bearish.
Yeah. And you make a good sense. Sometimes people like look at the VIX and the minute it goes up, right? Like from the movie Trading Places, sell Mortimer, sell. And it's like, well, wait a second. Yes. If you sell at 22 VIX and the SPX recovers from a volatility point of view, not a price necessarily, you're fine. But as Troy says, if we go under 66.90 or whatever in the ES futures and we start blasting down, we'll be at 25 quicker than you can. So, what am I saying? Anytime when you're selling volatility, you have to think, you can't think of volatility in a vacuum. You have to include the price movement. And what does it signify? Because you'll get a better opportunity at 25 if it's going down. Now, if you're looking at the volatility, let's say VIX is 22 today, and it looks like you think we're holding, well, yeah, if you want to go, if you're going to sell a put credit spread or puts, that makes a lot of sense, but it can easily go, either way here. It's just, I think people are wrong, not wrong, but maybe are looking at all the information when they just say, vol up, whether it be 17, 18, 19, just sell it. And I just think, just consider price action before you go in and not mindlessly, but just selling, right? I think that's wrong to just sell high vol without looking at the price, because vol can go higher and you can run out of money selling puts, right?
Yeah, and to your point, I mean, it's interesting at the beginning part of the year. I mean, this year has been a pretty sticky, elevated VIX year. But even before April, Dan, we had a lot of shows where it was like, VIX is in the low 20s. Like, it's not really believing that this thing is going to happen. And then it can go lower. VIX can go higher. Market can go lower. Trump can tariff some penguins.
Yeah.
And then VIX believes it. And you have VIX. I don't remember what we got up to in April, but yeah. Yeah, it's interesting. And I'll just remind people, we're at around 6,600 right now. Like, that's where the markets were like a few weeks ago.
Yeah,
I mean, we're talking like what?
This is nothing. I mean,
No,
it really is nothing.
Right. The markets are in turmoil, and yet not in turmoil.
Yeah, I mean, what are we from the highs? We're still in spitting distance in a way from the highs.
Listen, I mean, we're 2 tweets from literally, I mean, a crazy day, but we could be at all-time highs in one day.
Yeah.
I mean, it's not out of the question. It's for those who, I mean, we did go up 10% intraday this year.
Yes, insane.
Which is insane.
Yes. It is still hard to believe what happened that one day. Yeah.
It is a wild time. One more thing I'll show you. This is kind of my I always say I have nuclear well plays, which you don't touch unless it's certainly not what we just said. Like when it's not a lot, but I do have this, and I put this on Friday. This is a VIX butterfly.
Okay.
And
a broken wing butterfly.
Broken wing butterfly. So basically, it's
the
25 strike, sell the 30 strike, buy the 34 strike. And so this is one of those things where it's either going to work or not work. If we end today, like I'll probably close it out. This is the last day. VIX options are confusing to people. So basically this is the last day to trade it, although it expires tomorrow.
Please speak on that for a second. VIX options do not work like any of the options on the backtester on the automation platform, or probably, if you're asking about them, any of the options that you're familiar with. They work very differently.
Yeah. Dan,
correct me if I'm wrong. I'm pretty sure they act like the SPX AM expirations.
I'm not positive. Yeah, I see what you're saying. Yeah, I think so.
Yeah, like you can't trade the AM expiration for SPX. Right. I don't think.
Right.
It just settles that day wherever it settles.
Right. Yeah, I think the big thing with VIX is just people. I mean, if you're going to do like 2 things. Number one, trade off of the futures, not the
Yes, thank you. That's the main thing, Dan.
And then number 2, I wouldn't. If you're going to do like same month, like you think VIX could go up, buy a vertical call spread, maybe a call, or like Troy's doing a broken wing butterfly that is going to have less risk on the upside. That means it can, you can make money if it goes up. One thing I would stay away from, unless you're absolutely zeroed in on it, I would not even touch a calendar or a mixed month spread unless because you're dealing with, and I think that's been a rule, like even with, whether it be corn options or soybean options, because you're dealing with 2 separate different animals. And I've seen people get mutilated. I mean, it's a horrible word. I didn't mean that, but it's
accurate though.
Yeah. I mean, it's okay. You do a calendar and SPX. It works like calendar should. You're doing a calendar and Apple. But when you do VIX, I would stay away from mixed month spreads unless you have a trained certificate from the VIX college, if there is such a thing. There isn't.
The College of VIX.
College of VIX, you better understand, that thing, just to keep in mind.
Yeah, we get asked on an infrequent basis, will you please add VIX options to the backtester? VIX options do not work like any of the other options in the backtester. So there is a high degree of complexity with them. They have multiple things that are unique to them. Most notably, people expect them to function like a normal option. So if you have a 0DTE SPX option, you can look at where SPX is, you can look at your option, and you can quickly do the math. That is not how VIX options work.
No
and
way.
the liquidity is something else. So like even Troy's spread that he modeled, that liquidity, and Troy knows this because he's Troy, that liquidity is going to be different than doing a broken wing butterfly on SPX.
Yeah.
What?
What?
That's one of my favorite lines. This is a side note. It's one of my favorite lines from the famous classic movie Billy Madison with Adam Sandler. His girlfriend's trying to encourage him, and he's sitting at the pool with his drunk friends, and his girlfriend's like, you're meant for so much more than this. Some people just float through life like piles of crap. And his two drunk friends are looking at him and they go, what is she talking about? And that's one of my favorite. Anyway, I think that one of the things with the vol spreads, to the point, like during the April stuff, I had a lot of different things going on and they were hitting. I felt like a boxer. I was striking. This one feels harder. This is harder to feel like I'm kind of striking a little bit. Until you know what's going on, there's some hit and misses sometimes with this stuff, so you have to stay small. Sometimes even when you know what's going on, there's hit and misses. So, but one of the things I did, to the point, just to say this about the vol stuff, is I would get really long vol with VIX calls, and I had some different expirations. But one of the ways I would hedge against it, or more kind of like gamma scalping a little bit, it's a little more complicated, but I would sell front month VX futures against my VIX positions. It's a very different thing. I just want to encourage people, don't do that, because there's days, like if you think like you really have to know the vol complex to do that. So I shouldn't even have shown the VIX, but just show you, like, there's different ways to play this stuff, I guess is what I'm saying. Like, some of those hedges could go against you in a way, like the front month can actually move a lot more than even your VIX calls. So to Dan's point, like, say you have 30-day VIX calls at 30, right? And we go up to 25 and you're like, hey, I'm going to lock in some profit. I'm going to sell front month VXM, the micro VIX futures against it to lock in. Well, it's really actually pretty difficult to figure out what deltas you're hedging. And so what happens is people will overcompensate, and then you'll get a front month VIX move of like 40% when the 30-day spot VIX moved to like 11%. Well, now you're actually in trouble a little bit, if that makes sense. Like, now you're too short the front month VIX future.
That's right.
Anyway.
Hey, I was going to say, don't you think, go ahead.
So this is an interesting question, because I think people like the show on crazy market days. Here is a question. We've gone pretty deep into the VIX via a little bit of talk of futures, VXM even. What are some structures for normies in this time? Let's say let's take a look at the futures. Futures slightly bullish on the OO show. We've gone up 10 points. We're down 60 in the futures. What are some structures that somebody could put on if they still feel too long delta at this point? So I'm too long delta. I'm just saying a hypothetical, because we get this question. The market's already started to sell off. VIX is elevated. Troy, you showed an upside VIX play. What are some structures when VIX is elevated where it's expensive to buy a put? What are some structures that can use options? Like, just a couple simple things. What do you guys think of in a situation like this? When VIX is already pumped a little bit, the market's already sold a little bit, and maybe you still feel a little bit too long.
I 100% defer to Dan.
No. Troy's will have more. The only, before you start, I just thinking something that's easy to understand. It has a little bit of long Vega, but again, when option volatility, I love for a retail account, the reverse iron condor. If you're, I like it. I mean, you could do, depending on the capital, you could do wider or narrower. You know, if you just look at SPY or SPX buying many different flavors, you know, you might buy a 30, 35 delta call, 30, 35 delta put, longs, long the strangle. And then you could sell your wings as far out as you want. You could go 20 wide, 30 wide, 10 wide. But what I like about that is it a little bit of long Vega? It's just a little bit, right? It's because you are selling enough. But the benefit is you're basically saying, if we move, you don't have to pick a direction. You just have to say, hey, do I think the market still has some 40, 50 point moves in it? And I think we'd all agree, yes, right?
Yeah.
So you put this thing on, you could pick the duration, you know, maybe you do it on Friday, or you do it, you know, obviously you try to build it around maybe some catalyst, but sometimes it just, you know, in this market, the things have already happened. So this is whether it's unwinding or going to be more. So I think a reverse iron condor, again, you can do it 10 wide. If you do it 20 wide, it could be about, I don't know if it's about $1,000. If you do a 10 wide, it could be 400. If you want to do a 30 wide, but I like those. They're easy to understand. They're long gamma. You're going to get
fixed
short
risk
on the way down. Yeah. Define risk. You're going to get long delta on the way up, short on the way down. And I think it's, you know, are there other ways to, and you don't need a portfolio margin. It's, you know, you can get a really good return if it goes your way. It just, and it's simply two vertical debit spreads, one on the call side, one on the put side. You can structure them. I think that's pretty straightforward. Now, for a beginner, you could say, well, it's 4 legs, but you're just buying a vertical debit spread. Now, and you could just say, hey, I can leg into it. I'm not any good with direction, but you could say, okay, you know, market's down 100 points off the high in the futures tonight. I'll start with the called, you know, as long as we don't go under, like what Troy was mentioning, the 66, what'd you say, 66.90 or something in the futures, or I forget what Troy said, but
65.93.
65.90.
Okay.
As long as we don't go under, let's say you start with the call debit spread, and if we go up, you add the puts. Now, for me, I'm not any good at that, really. So I would just put the thing on, because, and what you could do is, again, because we're doing this for like an event, or because we're moving, if you do let's say you do the reverse iron condor, a lot of times, let's say we go up, right? And you're up pretty good on it. You could sell out the call side. Then you just got the puts. You know, kind of like what Troy did yesterday. Troy had the long futures and the long puts. ES went up. He sold out the futures. Now the market's down. And more important to me, the market's down and vols up. So he's getting a decent price for his long put. So different ways to do it. But again, make sure you know, I like to define risk trades. Wouldn't you say, Matt and Troy, for especially beginners? You know what, if anything crazy happens, there's no weird thing going on there.
I think that's exactly right. I think if you are like in Rob's boat there, where you just sell puts, and a lot of people do put spreads, puts, you are into a move like this, you are long deltas and you are short Vega, most likely.
Yeah.
And so one of the things you have to do is you need to like probably cut some of those long deltas a little bit. You probably still want to remain long delta. Like you want positive deltas, because you want to profit from those rallies. I mean, you don't want to like lock in a loss, and that's what you're doing when you get delta neutral like that.
Absolutely.
So I think a reverse Rick, where you profit from the movement a little bit, is good. You're adding Vega to it. I think if you have a lot of double calendars on and they've gone against you, but they're still not at the shorts. Like I've got double calendars that are going to open down today in the queues from the small account challenge, but they're still a ways from their shorts.
Yeah.
So you're not going to close them out. You're going to let them play. And the good thing about automation is I'm not even worried about those. I can just discretionarily hedge in my account. And that's what I often do. And so for me, that could be something like you actually really want, I wouldn't actually even cut any of the long deltas. I would keep all the long deltas if you have that, but I would maybe add even more Vega to the downside. So some put calendars below, or even put diagonal where you get even a longer Vega, right?
Yeah.
So you do
An inside diagonal.
An inside diagonal, a long
Yep.
put, or you something like that. But I wouldn't go nuts. Like that's the thing that's tricky with this stuff. It's like salting. Like you really want to keep it. If you're sized correctly, where we're at this morning, you might lose money, but you're not going to get hurt. So don't overcompensate.
Yeah.
You know, don't go too short. You know, and that's crazy for me to say because I'm a perma bear, but you don't want to go too short usually with these things because yesterday's can happen. Listen, today we could end up 150 points up. That's how these things happen.
Or down.
Or down.
Or down.
And so, yeah, and so you don't want to lose the deltas if you've got the deltas. You just want to be able to gain some volatility if we go down a little bit to account for that. Dan, that's my initial thought.
No, I think that's right. And the only thing I'd say, just in the world of short puts, for people who are just used to selling puts, right? And there's nothing wrong with selling puts naked. I don't do it, but the people who do it, as long as you're, like Rob, he's proper sizing and he has risk management, they're fine. It's for someone who's doing it. The only thing I would, when you're in a rocky environment like this, let's say someone wanted to sell a put today, naked. For those who normally sell naked puts in this environment, if I'm going to come in at the open and sell a 23 volatility in the, sell a put, at that point, I would grab a put against it, underneath it somewhere, right? Only because it's not for the price move, because, someone could look at it and say, Dan, I'm selling a 10 delta put or whatever the put is. It's stinking from here to Indonesia. It's so far out of the money, but you're not buying it for the price move.
100%.
At the vol, buy something against it, because if something crazy happened and we're down 200 or 300, that long put will be like, whoa, it's 1,000 points away from the put, but that thing's trading at, I'd buy a put somewhere. Just in this, when it's rocky environment, just for,
and you want to do it now, because here's the thing, like you're saying with Dan, like when we were at the lows during Liberation Day stuff, I don't even remember where we were. Do you remember where we were at the lows?
Yeah, I think we got to 49. We got below 5,000.
Okay.
I think we got to 4,900. Somebody in chat, tell us what the lows were at Liberation Day.
Yeah, so the Liberation Day lows, at the lows, when I think vol was around 60. I think vol kind of peaked around 60 during that period, if I'm correct. Well, you don't want to buy a put when vol's 60.
Correct.
That's not the time. That's not the time to buy a put when vol's 60. Just like it's usually not time to buy a 30-day or sell a 30-day put when vol's 12. It's just an auction function.
Yes.
And so you want to have cheap puts now, and you might think, that's overpriced. Like 1,000 points down is $200 for 30 days out. That's crazy.
Yeah,
brother.
That's not about the price. It's about the vol.
It's about the vol. Yeah.
When that same put is $2,000.
Yeah.
And we haven't moved down near it.
That's right.
You will thank us. And so 48.32 is the low. Thanks, Gregory. So I remember looking at the lows. You could sell like 30-day out 20 delta puts, and they were like 2,400 points down. Like there was something nuts. Like that's what the deltas get changed even without price movement.
That's right.
With vol. And so when in doubt, buy a freaking put, buy a stinking put, as I've heard someone say. And so but you can still be long deltas. I'm not opposed to that, because the statistical chance that we go up is higher than vol keeps going up. So you have to
Troy, I think those two go together. If you have a T-shirt on the front, it'll say, China's situation will be fine. And on
We'll
the
be fine.
back, after
Buy
you
a
hear
stick
that
and put.
comment, buy a stick and put.
Yeah, that's right. That's right. I listen. My gambling. I don't have a gambling problem, and I'll bet you $1,000 I don't have a gambling problem.
I'll bet you $1,000.
But this weekend, Bitcoin was down like to 100,000, I think, at some point.
Yeah.
And there was a part of me that was like, I'm just going to buy some Bitcoin, and I didn't because I don't buy crypto. But it is, these are opportunities, and I agree with Rob in that sense that like there's always an opportunity in the market. Sometimes it's buying vol, sometimes it's selling vol, whatever you want to do. But anyway, listen, we'll see what happens. Unfortunately, tomorrow and Thursday and Friday, there's not going to be an OO show unless Matt, does a last minute.
I don't think we're going to do one. This is everything's fine. There's just a number of traveling pieces going on.
Yes.
All of us are traveling, so we're going to have 3 days. You can console yourself with the 2 YouTube videos that we put up over the weekend. And
we're going to do
the 150 back show problems. The back show videos that we have on YouTube. So
we're doing we're going to do some cool stuff. So Dan and I are going to be in Chicago tomorrow, and there's a good chance we might have some cool content to show you pretty soon. So we're excited about that.
There it is.
So anyway, but listen, guys, stay safe out there. If we go down, as always, if we're down 500 points today, Matt will pull over and we will do a show if we're down 500 points. So that's our promise to you. But anyway, well, listen, you guys have a great trading day. I have not forgot about double butterflies. We have one to show you, but the market just has to stop gapping lower overnight for us to talk about it. So on that note, happy trading, and we will see you guys back Monday unless we're down